I have fallen further than I had before. But now I'm crawling, and I don't have the strength to get up off that floor. I'm giving into it, I'm living in it, embracing all the pain. Can't run from it, I can't numb it, I won't medicate. I'm still learning and growing. I am not who I was before. I'm done hiding from all my failures. Wait and see my masterpiece. Bruised and torn on my broken parts, falling like they collide, all to take me away to be. So I thank my lucky scars. I thank my lucky scars. If I feel it, if I feel the pain, then I am still alive. And if I'm living, wanna give it all, not simply survive. I'm leaning into it, I'm breathing in it, inhaling all that hurt. 'Cause walking away, it'd all be in vain, and that would hurt much worse. Oh, I am not who I was before. I am done hiding from all my failures. Wait and see my masterpiece. Bruised and torn on my broken parts, falling like they collide, all to take me where I'm meant to be. So I thank my lucky stars. I thank my lucky stars. Oh, I don't know where I'm going, but I'm still learning and growing. I've fallen out so much, but hell, I showed up. I'm much better off knowing I'm not who I was before. I'm done hiding from all my failures. Wait and see my masterpiece. Bruised and torn on my broken parts, falling like they collide, all to take me where I'm meant to be. So I thank my lucky stars. I thank my lucky stars. I thank my lucky stars. I have fallen further than I had before. But now I'm crawling, and I don't have the strength to get up off that floor. I'm giving into it, I'm living in it, embracing all the pain. Can't run from it, I can't numb it, I won't medicate. I'm still learning and growing. I am not who I was before. I'm done hiding from all my failures.
Hey, 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 hey. We are live on the live right now. We are on the live right now. I'm telling you, we are ready to roll. We are ready to roll. We got an interesting topic, and we just want to say that. That thing is coming in. Turn the volume down. We want to say that we are ready to roll. We have a very important topic today. And so we just want you to be ready to roll with us. First of all, we need you. We thank you. Yes, thank you for joining. If you are joining live, and we want you to be ready to also share the live right now so that other people can see what we're doing, and then we can definitely hit the ball rolling. So that is what we want to let you know. Sharing, as I say, because you want to do what I say. I don't want to just tell you to share and I don't share. I'm sharing, so you got to share too, so that we can enjoy this time together. We have a very wonderful time that we are going to talk together right here, and I just wish everybody uh, was able to hear us today. I just wish people are able to come on. So I'm waiting for you to not only to join, but also to basically share on a live with us. Be ready with your comments. Be ready to share your comments. Be ready to ask questions if possible. Be ready to ask questions if necessary, and ensure that we roll together on this very important topic. It is very important. So I just want to make sure that I get that right out of the bat. So hit the like button, hit the share button, and the like is a thumbs up basically. If you hit a thumbs up, if you're watching from Facebook, if you're watching from YouTube, if you're watching from LinkedIn, wherever you are, there's going to be a button where you can hit share or you can hit like, you can hit the thumbs up, because this is very important so that we can all see this. And if you somebody that cares about other people, this is a great opportunity to also share with them, because they are going to benefit as you benefit. So that is definitely what we want to do right now. We had to rush through our preparation right now, technically, but I'm hoping that everything is going to go on smoothly. But if we get any hiccups, just remember it's your boy Otane doing his own thing at the last minute. All right. All right, all right, all right. So we are going now. Before we hit the ball rolling on our topic, I know you've already seen the topic. Before we do that, we want to hit on something that we usually do, and we want to that is the health tip for the week, weekly health tips. So we are talking about finances, but we need to remember that we haven't forgotten about our main, or one of our main reasons for doing this, that is to encourage people to live a healthy life. And so our weekly health tip today, we're going to share what we have actually been begun to do as far as health wise. Last week when we met, we talked about starting on Monday, on the Monday of last week, basically, what we call intermittent fasting. We had a guest who had started intermittent fasting for a month on a channel, and we encourage you, if you watched it, to do the same because of the tremendous health benefits. So we actually have been doing it. I mean, I haven't been religiously, but at least I have been doing it at some point, and my wife has been doing it. So we want to share our experiences before we move forward to today's topic. So I will leave you to say something about what you have done so far.
Okay, so like we mentioned last week, intermittent fasting is the one that we are doing is 16 hours of fast and 8 hours of eating. And within that 8 hours, you have to eat twice. Because I think our guest mentioned that people will snack throughout the 8 hours, which indirectly you are going to increase your calorie level. So within that 8 hour period, you have to eat twice. So basically, I think you are just cutting one meal out of your three meal a day. So I started Monday, And lo and behold, I stood on a scale and I've lost 2 pounds,
Whoa,
which is a big deal.
2 pounds
Because
lost
two
in
whole
1 week,
pounds.
right?
So it's like sometimes you diet, you eat right, and the scale wouldn't be moving. You exercise, you do all the right things, and you feel like you have plateau and nothing is working. Try this intermittent fasting that we are talking about. So my challenge, the big challenge that I had during the week, is sometimes my work schedule is such that um, you should be done by 8 p.m., right?
Mhm.
So I get off at 8, so there is no way that I can eat my second meal. So what I've been doing is I'll take my dinner to work and I'll make sure that I will eat before 8 p.m. So I think that's where the challenge was. Maybe your work schedule wouldn't like help you follow through thoroughly. There are tips and things that you can do differently so that you can achieve your aim. So I try to change it a little bit previously, not this week. Instead of starting at 12 and ending at 8, I'm like, because of my work schedule, let me change it to 1 to 8 and 1 to 9, which is still the 8-hour frame, right? But it's been proven that after 8 p.m., most of your fat, because after 8, it's likely that everything slows down. You're going to slow down in your movements. You're not doing much. And it's likely that you are going to retain all the calories. So it's best if you can end by 8 p.m. You should be done by 8 p.m. so that the fasting will start. So I think I've been doing it religiously and it's working,
It's
guys.
working.
So
It's working. It's working. Two
if
pounds.
you haven't
Two
tried
pounds.
it,
2 pounds is working. It's working, baby. It's working, right? 2 pounds is huge in
it's
1 week.
huge.
It's working, right? And I'm hoping that other people are going to take a cue from this and do the same because your health is as important as anything. You know, most of us are concerned about all the money we can make. But as we said last time, if you are not around to enjoy it, what's the point? And if you're around but you're sick, you don't enjoy it. You can travel, you can do anything. So we got to make sure that we are following through with our health and making sure that everything is on point. So this is easy to do, intermittent fasting. You know, don't eat, in the mornings. Even if you can't do the 16 hours, we encourage you to at least start at some point, even if it's 8 hours, 10 hours, however much you can. Just do something. Nothing is worse, but something is at least a start. And then after that 1 month, you can improve it. Even though we may not talk about it as much, you can still keep going. And we don't want to bore you with the facts of what intermittent fasting can do. Apart from the weight loss you talked about, it can reverse, diabetes if it's just starting. It can also give you long life, longevity. The studies that prove that people who do it have a longer life. You become able to beat other diseases because your weight is managed. All right, so that's where we're going to leave that as far as our health tip for the week is concerned. So we're encouraging you, if you haven't done intermittent fasting, again, it is going on. You have more information. If you want more information, you can go to EzraWellness.com and Lady Salome channel, Ezra Wellness on YouTube, and you can follow through with the directions as to what to eat and what not to eat while we are doing this intermittent fasting. If you have any questions, you can also hit us up on the comments and we can link you up if you have any particular thing you want us to talk about, or if you have anything you want us to share concerning intermittent fasting this week. I hope you can put it in the comment section and we will be able to talk to you about it or even link you up with other people, especially our lady who is doing this on her channel. So that is where we're going to end with the health tip for this week. We're going to go straight into something else. And as you are aware, we have a huge topic. This topic is dear to my heart because of the community that I belong to. And I, honey, you agree, right? It is,
Oh,
it
yeah.
is, it is an interesting topic. It is an interesting topic, and basically, it is coming at a time that we need people to be involved in, and I hope that we can use this medium to exhaust a lot of the doubts. I mean, to clear a lot of the doubts out there, and improve the information, at least our knowledge level. And if we have more questions, because it's dear to our hearts, we have a phone number at the end. Just hit us with a text message. We can help you ourselves. We are already both licensed financial service providers, and we can help you. If we cannot, we can link you up with other people who can help you. But definitely make sure you stay true to the end of the show and get the number if you have to talk to us, or if you need help in any of the areas that we want to talk about. So, yes. So, what is the title for today? Our topic for today is creating wealth using life insurance. Creating wealth using life insurance. Do you have anything to say while we hit the ball rolling?
Yeah, so like you were talking about the community that we are in, I feel like the knowledge is really low, lack of knowledge. And we
And
know
lack of
that,
knowledge, my people perish, all right,
yes,
baby?
yes, yes.
My goodness, people are
So
perishing for lack of knowledge.
we are trying. I feel like we should, somebody said that you don't stop learning. So you have to open up for information. Even if you're not comfortable with it, you still have to open up and learn.
Yes,
Maybe you can change your ways a little bit, and that at the end of the day is going to help you. So knowledge is power, like we said, right? Knowledge, having the knowledge can cause you to make little changes that may benefit you in the future. So don't close up. Maybe you hear the topic and you're like, it's not for me. This thing that you're talking, I don't believe in it, like what you were talking about last week, right? And our guest said that it's not a religion for you to believe in it.
definitely not a
So
religion.
just open up and receive. If you are in doubt, do your research, ask more questions. And I'm sure, very sure, we are so passionate about this. And I think it's going to help you in the long run.
Definitely, 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 definitely. So we are about to start, and we want to talk about the reasons why. Maybe you have been following our health information. We told you about the fact that we talk about importance of health. We, in fact, most of our videos on this channel are about health, right? Health information. And so you may say that, what are you guys talking about now? This topic doesn't seem to be your area. It is our area. Fortunately or unfortunately, it is our area. And so we definitely need to know what is up, what is going on, so that we can educate ourselves, not just ourselves, but to make sure that we are doing the right things. We're doing the right things. All right, so we are going to hit the ball rolling, but the reason we are doing this, as you can see, a scripture out there, it says, "Well, beloved, we wish, I pray, that you may prosper and be in health. You may prosper in all things. You may prosper in all things," right? That's what it's saying. It says, "You may prosper in all things, even as it is well with your soul." Is that not what it says? Exactly. So why are we talking about this? Creating wealth using life or health insurance. We've already done using the life health insurance part. Today we are talking about this other one, which is the life insurance. And the reason is what I've said. John, 3 John 3, right? You want to say something about it?
Yeah, so we prosper in all things. In all things means in all things, right? So every aspect of your life should be healthy. That's what God wished for us all. So, like, physically, we want to prosper, right? Spiritually, we are prospering because we are in the faith. But financially, we also have to prosper. So that's the reason why we want to broaden it out, not just the health. So, because if you are healthy and you don't have the money to enjoy, what is life without money, right?
Exactly, exactly.
So, you need the wealth, you need the money for you to be able to enjoy with your healthy life. You're going to live for a long time. You're going to live for a long time because you're taking care of yourself.
Definitely.
You are trying to beat diabetes, you're trying to beat high blood pressure, you are trying to beat all the things that weighs you down or take you out, you know. So you need the money to enjoy and not become a burden. I think last week you talked about the long-term care, which is also part of it. You know, you need all that together. You don't want to be narrow-minded, just one-sided, and miss out on other things. John is saying that in all things. So let's broaden our thinking, let it touch every aspect of our lives, and let's enjoy life fully to the top.
My goodness, my goodness. That's well said. That is well said. That is well said. All right, so we are going to hit the ball rolling. So now we have provided you a justification of why we're doing this. We are not only concerned about your health, we are also concerned about your money, your pocket, concerned about everything that goes on around you. This is the basis of our channel here. We wish that you prosper financially and in other areas, even including marriage. That's why we've talked about marriage at some point too. And also in your health, that you'll be healthy. And that's why we do a lot of health videos. That's why we actually gave you a health tip in the beginning of the show, because we want you to be around and healthier. And then also, we wish that you also have prosperity for your soul. Your spiritually, you are also doing well. And we hit all these three on this channel. And so we're going to go ahead, having provided that justification. What is wealth then? If we say people should prosper, we're talking about financial wealth. So for wealth, I'm going to start, and you take the next slide. Dave Ramsey says that wealth is margin, or at least his people, they say that wealth is your margin. So if you have margin is the extra income that you have after you pay all your bills. So you have a job, or you own a company. All your expenses are taken out. Your bills, your mortgages, your rents, your tuition, your student loans, everything is taken out. Whatever is left is basically your margin. And for me, your margin is what we also call your cash flow. That is how much money is flowing in your hands. That's easier to remember, right? That is your cash flow. All right. So if you don't have cash flow, if you don't have any cash after you pay all the bills, then you are very poor, right? You are not wealthy. And if you don't have cash, you have no purchasing power. That is something I added too. If you don't have any cash in your hands, you cannot buy unless you live on credit, which some people do. But I'm pretty sure everybody, even those who have a lot of credit, they know that credit is not good. I mean, if you're experiencing credit, you know that credit is not good. I don't have to say it. But your purchasing power comes from what is actually in your hands, what cash you have that you can spend and not go like begging for your next, rent or your next food or anything like that. That is your purchasing power. So that is what, in short, I'll call wealth to be. And then we are also saying wealth can also be defined in another way, and I will have a gift to talk about that part. You want to explain this? I'll add some to it later.
Yeah, so wealth formula. There is a formula in making wealth. So like you're saying that wealth is your cash flow, right? And your margin. So if you are living paycheck to paycheck, and after you've paid all your expenses, you don't have anything left, it means that you are poor. That's how you're finding wealth, right? So there is a formula actually that people have found, and they are using this to their advantage. So if we are talking wealth, what is the formula? And I think it's showing right on the screen. It's money plus time plus or minus rate of return minus inflation minus taxes is equal to wealth. That is a lot.
That's a lot. That's a
In
lot.
one.
That's a lot. Well, you're going to break it down a little bit. We're going to break it down a little bit. So you want to start with the breakdown? You want me to
Okay,
help out?
so we talk about money, right? So money should be something that maybe after you've paid all your expenses, right? You have the money. If you are living paycheck to paycheck, it means that you don't have anything left over for you to be leading towards wealth, because
Okay.
it's a formula. So you need money.
Okay.
So if all your income is such that you are using everything for expenses, it means that you're not going to end the equation. The equation is not going to balance. So you need money. So in order to have money, it means that you have to what? Save. There should be a leftover, or you have to spend less. So like if you are getting, let's say, $1,000 from your paycheck, and you pay all your expenses, everything, your expenditure, and you are left with zero, there is no way you can create wealth.
All right.
Because the equation is not going to balance.
It's not balanced.
It's not balancing. So you need leftover.
Okay.
There should be a leftover.
That is what I called earlier the cash flow.
The
or
cash
your
flow.
Margin, right?
Yes, you need that money. So we will talk about ways that you can do in order to get the money. If you are living paycheck to paycheck, there are certain things that you can do differently by spending less and saving more. So they have this rule that you have to pay yourself. Paying yourself means that after you've worked so hard, you sit down, you pay your mortgage, you pay this, you pay that, your grocery, everything. You are paying other people. You are paying other things. But what about you? You worked for the money. So there should be a leftover. So people are saying that there is no way there will be a leftover. Then you have to find a second job. Because in order to reach that point of wealth, there should be money saved.
There should be something left over.
There should be a cash flow. So that's the money part. Then we move to time. So after you get on the money, you should leave the money somewhere at a place that the money will grow.
Okay.
Over a long period of time.
Alrighty.
So if you have $200, you have to save it, but you're going to save it long enough for it to grow, for you to get the wealth that we are talking about. And the rate of return. So wherever you're going to put that money, there should be return on your money. So if you know that you're saving, but you're putting it at the savings in your savings, you check the returns. And you can see that sometimes you can leave your money in the savings account and you go back and it's only 10 cents increase. So that's the return if you put your money in the bank.
0.1.
Yes, so that is the return that you have to take into account. And also inflation. Since you are going to leave the money in the long period of time, the inflation can affect the value of the money. So if you have $100 and inflation is 7%, it's no more $100 anymore. So the
value has gone
purchasing
down.
power, like you talk about, has gone down. Then taxes, right? You are taxed. We get taxed a lot. You buy, they tax you.
6%, 6.5%, depending on where you are.
You save, they tax you. Whatever you do.
Depending on where you are.
Wherever
even
you are.
In other places, VAT, those who are not in the US.
Lots of taxes.
Yeah, taxes everywhere.
So,
and then income tax.
Income tax.
Taken at source.
All that. So at the end of the day, the leftover is your wealth. So you have the formula. That is the formula in making wealth.
Right.
So what are the things that we can do with this formula so that we can end up with wealth? So that's what we can
What
talk
are some
about.
of the things? And that is why we have chosen one of the things that we are going to talk about. One of the things, in fact, until I found out through my training and stuff, I did not know that you could make wealth in this way. And that is what we're going to add. But the key thing that I also want to stress on this subject that she has, this formula she has given us, is she said money left over a place over a period. That's the time, right? Plus time. And then the rate of return, it could be plus or it could be minus, depending on where you put your money at. And most people are putting money away, but it is not earning them enough money to grow the wealth. So they may have saved a huge sum of money, all right, but the rate of return is very minimal. And she said that if inflation takes care of it, then you basically are back to square one because you are not making enough on your money that you're putting away. But did you know there's a way to make sure that your rate of return not only is fixed or promised, but also something that can continue to grow and grow? And that is where our next slide is. And that is where we chose this topic. And that is what we call how to use life insurance to create wealth. How to use life insurance. So there may be other tools. Other people talk about mutual funds, stock market indexes, and stuff like that. And all those are good. But we are going to talk about this because this is a lesser known option. And not only that, it is also looking to be one of the best options out there. I don't want to say it's the best because maybe you know something that I don't know. But for what I know, at least for what I know now, I think this is looking to be one of the best out there to make sure that you come out of poverty. And we are going to show you the reasons why. And so the first thing we're going to talk about is what is life insurance in the first place. We're also going to talk about what are some of the types of life insurance. And we're also going to talk about the pros and cons of some of the types of life insurance. We're going to be just as frank as possible. And then we're going to talk about one particular one, some of the features of IUL, which is basically Index Universal Life Insurance, which we think is one of the best out for the kinds of life insurance. But we're going to talk more about it. So don't leave yet. Don't leave. In fact, don't leave. Share the stream and ensure that we enjoy this presentation together. And again, we are no experts, so we may make mistakes. And that is the beauty of this. I am not scared to make mistakes. And so if I make a mistake and you want to add something, just put it on the comment section. We'll take a look and correct ourselves. But I can assure you that we have actually we have done a lot of training before we came out, so we know a lot to be believed. So let's move on with what we are. So what is life insurance? What is life insurance? I think before we talked about today, we talked about what insurance is. We want to remind us. Remember, you defined it last time we met. What is insurance?
Like putting the risk on someone else.
Transferring
Transferring
the risk.
of risk.
You are transferring. Insurance basically means transferring
Transfer of risk.
your risk to somebody else. And in this place, I'm pretty sure you're not going to transfer your risk to your children or to your church or to your siblings, but you transfer it to a company which we call the insurance company, and they have and sit on huge sums of money. So insurance basically means transferring of risk. So when we talk about life insurance, we are transferring the risk of life, not the life lost, but the risk of our family members, our children, our brothers and sisters, our parents, our church members, whoever you love. You are transferring the risk of them going bankrupt or having to beg for food when you are not there. All right. And that is what life insurance is. But the key thing is it has evolved from just transferring that risk of them taking care of your final expenses to using that to actually make money. And that is where we want to. That's where we definitely want to hit at. So it is not just the transfer of the risk of people taking care of themselves, but you here on earth, while you are alive, making money. So that's the beauty of it, and that is why I like this better. So I know because those people who watch this channel, they are not going to die soon, right, honey?
Oh yeah.
Oh yeah. We are praying for you. My goodness, you are not going anywhere.
We are doing all the right things.
Yes, you are doing all the right things. You are following the health advice we're giving you, taking care of your body, taking your medications as directed, and everything. We are hoping you're going to be around doing your exercises and everything. But then, what if you can make money while you are alive? And then when you are old and you are gone, what if your people can say that my mom or my dad left me wealth? And then your people are happy that you lived. And that's what we want to help people do. So let's move on. We're saying...
Yeah, you remember you talk about legacy.
Legacy, yes.
Legacy.
Yes.
So that's a big thing. So
Yes.
you're not going to burden your children, your loved ones. You're not going to burden your church. You're not going to burden anybody. After you are gone, people are going to gather together and celebrate you because the stress has been taken away because of the way you put things together, the knowledge that you are acquiring and doing the right things for your loved ones. So this is huge, guys.
This is huge. And if you love the people that are around you, and you think about this investment option as the best, because we're going to talk about some of the differences in here and there, but if you have children, if you love your children, you would want to make sure that when you are not there, they are provided for, right? If you don't have children, you have a wife, you have a husband, you have an uncle, you have a brother. You want to make sure that when you are not there, they can benefit from you not being there, so that when they remember you, they will laugh, they will be happy and say that, oh man, my brother lived or my sister lived, and look at what because of a life I have become or my children have become. So definitely that is very important. And the good thing, I mean, the unique thing is that since you are watching this channel, you are not going to pass away anytime soon. So you are also going to use this as a means to create your own wealth. And that is key. And that is that is what moves me more, because like I'm saying, I don't expect anybody to die young, but if you are around and you can have a product and an investment that can give you money while you are alive, oh man, what is better than that, you know? But we will see more as we move forward, and we will understand more. So let's move on now. What are some of the types of life insurance? Yes, types of life insurance. We'll go with the first one is term life. We're going to talk about term life a little bit.
Term life is the one type of insurance,
Life
like we
insurance.
said, life insurance, and that the word term means that it ends at a point.
At some point of a term, right?
It ends at a point, so there is limit to it. Yeah, so like term life, sometimes you have 20 years, you have 10 years, so it's not permanent. It's not long form of it. It terms, it ends.
It ends.
So
Like
that's one form of
it's like a semester. You go to college and your semester ends, right?
it's a term.
Yeah, just to make it easy. Yeah, yeah. It's basically for some period. Some term life could be 10 years, 5 years, 20 years, 30 years, depending on what you actually sign up for. So basically, term life will end, and that is one reason that term life may be cheap. But that is just another thing. All right. So we can go to the next one. We are not doing good on time. We may have to do this twice because we have a lot of information here. Yeah, and what is permanent life? So we have two types of life insurance. The first one, give to explain, is term life, and the second one is permanent life insurance. And the permanent life insurance, we have different kinds of permanent life insurance. And the first one is whole life, and we have what? Variable life. We have universal life. We have variable universal life, and we have what? Index universal life. All these are types of permanent life insurance. Permanent life insurance, or the kind of insurance that lasts forever. We didn't even explain what permanent life insurance is. You want to also talk about that?
So permanent life, like the word permanent, it stay with you for life. So the term ends, but the permanent stay with you till you die. So it's like a whole life, the rest of your life. So that's the difference. So the term ends, it has limitation, how long you can go with it, but the permanent stay with you as long as you're alive until you die.
All right,
Okay.
all right, all right.
And another differences between the two is the term, because it has limitation to where or it earns, is cheaper. So if you can afford the permanent life, you can go with the term life. The permanent life, because it's permanent, is little too high. So that's two of the differences. The term ends, permanent stay with you. Term has smaller amount of premium or cheaper, but the permanent life is
Maybe a little high.
more expensive.
And the reason is that, well, we haven't talked about that. Don't say it's too high. It's never too high, all right, baby?
Comparatively,
It's not high. The reasons we are going to explain why it is a little relatively higher than the term life. Why? Because there's something else we're going to talk about, and that is where you are going to use it for your benefit, for the cash value and all that. But as we said, these are types of permanent life insurance. We have a whole life, variable universal life, variable universal life, and then also index universal life insurance. And so what are some of the advantages and disadvantages or pros and cons of some of these types? We're going to run through them quick. We're talking about whole life. We want to talk about. Let's talk about the advantages first, and we'll go to some of the disadvantages. You want to start with the advantage?
no. So like, what is whole life?
Yes.
Okay, so like we've already said, whole life is a permanent life insurance that stay with you till you die, right? But whole life, I think, was the initial form of permanent life insurance. So I think that was the first one that they designed. So
Right.
this one, your money that you are putting aside, they use it towards your death benefits, and you still have a
Cash value.
cash value in it. So they just open a different account and put your cash value or the cash flow in another account. So it stay with you indirectly, like they save for you
So interest accumulates on that
on
for
that.
you. Yes.
Yeah. So that's the whole life. So that was the initial stage of permanent life insurance.
All
That's the
right.
whole life.
And to add to that, the whole life, the returns on whole life may not be as huge as some of the other ones we're going to talk about, because in the whole life insurance, you are promised a fixed growth. And so the insurance company wants to stick to a conservative rate of growth so that they can meet it. So if they tell you that, hey, we're going to give your money 5% growth, I mean, just using that as a number there, then they have to make sure that they stick to it. And because they have to make sure they stick to it, usually the rate of growth is slower because they want to make sure that they can meet the promise that they have made to you. And so that is one thing about whole life. But as this evolved, some new ones have come over, which we are going to talk about. Do you want to add something to
Yes.
it?
So the whole life, I think the term here is guaranteed.
Yes, it's guaranteed
right.
income. That guarantee growth that they will give you is guaranteed. So if you have a whole life, they will tell you that we are guaranteeing you this amount of growth, and then you are always going to get it because of the guarantee. And because it's a guarantee, trust me, if I was going to guarantee you something, I want to make sure it's something that by hook or crook I can provide. And so they give you a lesser growth on that, a lesser guarantee, because they want to make sure that they meet it. But that being said, there's still some form of income on your life insurance. Howbeit, not as big as the other forms that we're going to talk about. So the next one is variable life. And I'll also share a little bit of variable life. So variable life is also permanent life, all right? The only thing is, in variable life, they invest part of your money into the stock market, into some kind of either mutual funds or whatever securities that they can find. And then your money is supposed to grow there. Supposed to, because it's a stock market, right? There's no guarantee that it's going to grow at the rate that you want. And so over time, it will grow. With the stock market that we know is up and down movement here and there. But that being said, if you have done it for a long time, you are still going to make money. But there's no guarantee that you're going to make money. Why? Because it is in the securities, in the stock market or mutual funds, where the ups and downs cannot always be predicted. All right, so that's the difference there. And then the next one, we are trying to run because of time. The next one is universal life. Universal life. And you want to say something about that, or should I go? So the universal life is one that is more flexible in terms of how much your premiums are going to be, how long you want to pay your premiums for. Even with some policies where your premiums can be paid up to some point and you don't pay any more premiums, but you still have the product. And then apart from that, they will also give you interest on your money. Your cash flows grow also at the rate that they give you. Now, there's also another one, which is index universal life, which is the one that we think is the one that can be used to grow a lot of wealth, depending on your ability to put in and how much you can put in and how early you can start. Those are the key things there. And that one too, what they do is they set up the life insurance, all right, and then they promise you a growth rate. They invest part of your money into whatever business that the insurance company thinks is going to be good for them. And then they will promise you a ceiling, an amount of growth, say 12% per year. They will say 12% per year, your money, we are going to invest. We're going to choose where we are going to put it for you. And you don't have to do anything, but we promise you that as long as the market does well, if the market does so well, we are going to give you 12%. Even if the market does better, my 15%, 20%, we are going to promise you, we are going to make sure at least your 12% you will get. And then they also tell you that what if the market tanks? Like recently in 2008 and even last year during COVID and stuff, the market tanked so much that you got negative. we are in the index life insurance. They will tell you that, hey, when the market tanks, we are also going to make sure that we give you a floor. You are going to hit a floor. You're not going to go negative. So even when the stock market is about to crash and people are losing the money in 401ks, people cannot retire anymore, your money will never get negative. The least amount of growth is, say, 0.5%, 2%, 1%, depending on the insurance company that you have chosen and depending on the kind of product that they are also selling. All right. So that is the difference there. So people who are conservative and yet want to grow their money usually use the index universal life, because with that, if it grows, you win. If it doesn't grow, the markets don't grow, you don't lose, because the least that could happen is your money stays the same. But if you're in a mutual fund or you're in a stock market, then when the market falls and crashes like it did recently, all your money is going out. And so this is one of the best things about universal indexed universal life. And they hit the rate of growth to an index. You know, some of these terms may be a little difficult to understand if you are not in a financial area. But just trust me, when an index is basically a group of stocks that have come together and people are managing and ensuring that they grow at some point at a rate all the time. So the most common index that we know is the S&P 500. So of all the stocks on the NASDAQ or New York exchange or wherever, they put a group together, and the group that is commonly used is the S&P 500 and S&P 500, and that group of stocks can be hedged to your life insurance contribution. So the insurance company will say that, hey, we are going to hedge your growth, your money's growth, to the S&P 500. So if the S&P 500 goes up 15%, we are going to promise you that we're going to give you 10% or 12% or 13%. If the S&P goes south to say negative 50, we are still going to give you 2% or 1% or 0%. So you don't lose, you can only gain. And that is the beauty about indexed universal life insurance. So I don't know if you want to add anything to.
Yeah, I think with universal life, what I will also add is it's flexible.
It's flexible,
It's
yes.
flexible. So like if your premiums are such that 1 month or you lose your job, you are able to adjust the premium, your monthly payments. That's called the premium. So if you don't have enough money, depending on what is going on, you just have to adjust it. It's flexible. You can make some changes. You can go in and change your death benefits. You can go in and change your premium. So that's the flexibility of universal life, which is also linked with the index universal life.
Yes, index
So
universal life.
you
Yeah.
can go in and make some changes with your premium and your death benefits.
I think it may depend on how you set it up from the get-go. So once you are signing up, you just know what you want it to be. So you'd be like, I'm in an industry where jobs, go up and down. Maybe every 2 years, everybody's laid off in my industry. So I'd rather have some kind of a premium that is flexible, so that if I don't have, a job and I have contributed a lot of money already, they will use your cash benefit, which is grown already in the account, to pay your premiums for you. So maybe a couple of months you are out of job, you may not pay, but because you have already accrued enough cash benefit, they will use it until you run out of your cash benefit. Then you can start again. But the key is just stick to paying for it, because you want to use it to create wealth. You want to be able to take advantage of the money that you're putting away for your life insurance. So now a lot more of the advantages of this, and then we will move forward, is that in the index universal life, or the whole life, sticking to the index universal life, your cash value can grow to the point that you can take loans out. You can
That's
even
the features.
that's some of the features. You can take some of the money out. I think we had a slide that should go there, right? Yeah. We'll talk about why people are not using that yet, but at least we know that for the index universal life, some of the benefit is that you can take money out. So if you have paid up your premiums over years, Now, some people do make a mistake into thinking that, oh, I've started, and 2 years down the line, you want to take money out. How much have you contributed? You haven't had enough money in there for you to take money out right there. But if you are the kind of person who looks into the future, like 10 years, 15 years, 20 years down the line, your cash value would have accrued, depending on how you set it up in the beginning anyway. Some people don't want to contribute much. They are like, oh, I just want enough so that if I'm not there, my kids will benefit. If I'm here and I'm 60 and something has grown, God, then I thank God I can take it. But I'm not really interested in making wealth from it. That's fine. In that case, your premium may be very low, so you don't grow much cash benefit. But if you are the one who wants to utilize this as a wealth creating tool, then you may decide to set it up in such a way that, like the first 7 years, because something, max contribution, you pay into it huge sum of money. And rich people are using this. They will put a lot of money in there, and then it becomes available to them as cash. And the good thing about this is the tax benefit, right? It grows tax deferred. Your money grows tax deferred, and the growth, the only thing that will be taxed is on what has grown. Your money there cannot be taxed if it's not grown. So it is actually a huge benefit for rich people, and for poor people who are starting out and who want to come out of poverty, who some of us are, right? All right. So that is the beauty of Index Universal Life Insurance. Rich people have used it, but hey, they started somewhere. Their parents started somewhere. So if you are poor, don't say that this is only for the rich. It's for everybody. If nothing at all, the bequeathing of, or the passing on of wealth to your children should be the goal. And then if you are around old enough to collect some cash growth, to start your own business, to start your own real estate business, because you have enough cash flow there, then you do it. People are using it in several ways, and they are benefiting a lot. Do you want to add anything to that?
Yeah, so you were saying something about some people will put down amount, like few amount down, and in 2 years they are back looking for for
the
the
money.
money. But with the formula that we learned, you have to give it time. There is time in building wealth. If you are building it the right way, not the shoddy way or the wrong way, you have to give it time
You have
for
to
your
give it
money
time.
to grow.
Yes.
You have to give it time. So you put it in and you give yourself 15 years, 20 years, and you go back and you see that you've really done well because you have added time to the money, which will lead to wealth.
Definitely. And the other thing is, along with these policies, they can add. Remember, we talked about long-term care and critical care. If you are here, you are not dead. And yet, because of the policy you set up, it doesn't matter how long the policy had been. If you added it to your policy, and God forbid you will get injured in an accident, you can't work anymore. If you had added long-term care to your policy, which costs sometimes just about $20 difference, you are going to receive care. You're going to receive benefit. If you have to be taken care of by people coming to your home to feed you, to wash you, to take you around. You see these old people driving in, riding on buses, going for tours. They have saved for it, and you can use this. You are around, but you're getting benefit from the policy, which is, even though it's called life insurance, but since you are alive, you are also using it. And then critical care too. God forbid some serious disease hits. I think our coach was telling us about somebody who went through a diagnosis of cancer, and the first thing that they asked them was that, do you have life insurance? Not because they were going to die, but because they knew that the cost of taking care of that disease is so great that no insurance company is going to do that. And so if they had that kind of life insurance, then they can pull money from there and use it for their care. And this person used this money to take care of themselves, and they are still around. But if it was a poor person who without anything, they would just, as if they're taking care of you, oh, you'll be well, let's do this. And then they are waiting for you to just go, And so the living benefits is basically what I'm saying. There's a huge, a lot of living benefits. And again, it depends on how you set it up as you go. Some people will be like, I don't want anything attached to it. And that's fine. But if you think about all those things, you can bundle them up together and then get the benefit. Can we go more forward? All right. So the question is, why then are people not using life insurance? Why are people not using life insurance? especially in the community that we know. Some people do have term insurance, which is at least a start. Something is better than nothing, right? But some people don't have it at all. And our guest last week said that some people, when you talk to them, they say that they don't believe in life insurance. So that's some of the reasons why. Do we have, see, all right. So we already did this one. So I got my slides in reverse. Some people say that they are like, they don't believe in it. You don't have to believe in your financial future. You don't have to believe the tools. It's like, I don't believe in 401k. I don't believe in life insurance. But that is what it is. It is what it is. That's how people save for retirement. That's how people save, for life insurance. That's how people save money and are able to pull cash benefits out of them. That's what it is. The fact that you don't believe it doesn't change anything. One day, God forbid, you are going to go. And I pray that you're going to be around 200, but you are still going to go. Right? And so, what if you can set up something that will benefit you while here? And that's the key, because you're not going anywhere. If you're watching this channel, I pray you are going to be here. But if you are here, we want you to also do well. We want you to excel. So why not use this as a tool to enjoy your life while you are here, and also to pass on a huge sum of money to your family when you are not here. And that is that's the reason why we are stressing this. So some of the common excuses people have are,
I don't believe in this.
I don't believe in this.
Talked about.
Like we said last week, right? You don't believe in insurance. You don't believe in life insurance. Your believing it doesn't change anything. If you believe it or you don't believe it, you're going to go someday, right? And if you believe it or you don't believe it, even if you are not going to go, you can be poor. That one is fixed. You are either poor or you are rich.
And you are poor, and your generation, your kids are going to remain poor.
Poor.
What about you transferring this wealth to your the next generation so that they can start being part of the rich?
Yes.
Definitely.
So definitely.
Not believing in it doesn't change anything.
It doesn't change anything.
Working for some people.
It is working for
and
some
people. It's been proven that some people, group of people, have been used this for a very long time, and they are able to pass on the wealth, the transfer of wealth from one generation to another. So if we have this opportunity in this country, why are we not taking advantage of it and passing on wealth to our children? So we have, when we were growing up, all that we were told is work hard, go to school, study hard, go to school, study hard, come out, be good, go to church, work hard and make money. And that's all that we were told, which is all good, but it's not the holistic approach of enjoying life. Somebody should have taught us how to manage money, how to live well, how to live above the frail, not remaining on the poverty line. So we have the environment that is helping us take advantage of this. So why don't we just open up and listen and stop with these excuses that I don't believe in it?
You don't have to believe it. It is what it is. It is what it is.
And some of the excuses, is this for the rich?
It is for the rich. Oh, this is expensive. It is for the rich. It is not for the rich. In fact, the rich, they don't need it. They're already rich. And yet they are using it to make more money. And that is why you're saying that it's for the rich. No, they have seen how good this is. And because they've seen it, they are actually chasing after it. But you who are poor, hopefully you are not, but at least you are just above the poverty line. You are just getting by. Your children have no future if you pass away right now, and then God forbid if you do that. But if you don't pass away and you are around, how are your finances like within the next 20 years? What can you do to change your life around, including your own children, And so, and if you love your people, what can you do? So that is one thing. You have any more?
That is the avenue that rich people use to hide their money.
Yeah, rich people may use that because of the tax advantages. So if rich people are using it to hide their tax, what are you doing, poor guy? Yeah, what are you doing? If they're rich, after all the money they make, they are using these products to hide their taxes, to hide their money. and you are poor
Barely pay any
and
tax.
barely pay. Some people paying 750 when they are billionaires, and you the poor guy who is making 100,000, maybe 50,000, and you think that it's for the rich. So leave the rich to use it. That's you. That's your call. But that's why we bring the information to you, and then you make the educated choice. All right. And then what else do they say?
My kids will take care of me.
My kids will take care of me.
I don't need to save for
I don't
the
need
future.
to save for the future. This thing is expensive. If I do this, my lifestyle will have to change. My kids will take care of me. Just leave me alone. I'm not even dying now. Yes, you are not dying now. We established that fact. We believe, in fact, we pray that will be the case. And your kids taking care of you, that I don't agree. Even if your kids come to me, I say that no, you live your life. All right. Even though I hope my kids will have that idea too, but it doesn't happen, bro. It doesn't, sis. It doesn't happen anymore.
$100 a month.
Yeah, maybe $100 a month. They are also taking care of their kids, and you want to bring your burden onto them. They're gonna put you in a nursing home, like I guess said last year. So last week they said they're gonna put her. The son is saying right now. The son is in college, and he said, "Hey, you guys, when you get old, I'm putting you in a nursing home." The only thing is the son didn't know that if the mom doesn't save, he's gonna pay for that nursing home fee. But with a life insurance policy like an IUL, you can add onto it that long-term care, so that if you are still around in your old age, they will take care of it. Nursing home, if you have to go to nursing home, if in fact, if you do it early, you can even go to the residential homes where older people live, and people take them around for riding tours and living a comfortable life. But you got to do it through something like this. It doesn't happen. We're just putting money away because you can't afford it. Trust me. We already talked about that. It is too expensive for one person to save all his or her money for long-term care. But you can add a long-term care rider on a policy and be just relaxed, waiting for that time to happen. And you can check yourself in and out of any place. You can build, you can get your own vacation home somewhere. It's hot, and then people will come to your house and take care of you. Your money is paying. You are not paying anything. All these are stuff that can be linked to an IUL or life insurance when it's set right. And anything else you want to add?
I have 401k.
I have 401k. I wanted to get a chart to show you how 401ks does compared to life insurance. 401ks over long term may do good, but the key difference here, and that I think we should use to prove. I mean, let me back up a little bit. If you are getting matched in a 401k from your job, maybe like 5%, 10%, you can contribute that amount so that you can receive the matching that your company is giving you, because the company is definitely giving you free money, right? So you put whatever amount that they will match, however maximum it is. If it's 10%, put all the 10, because somebody's adding the exact 100% to it for you. And so that one, it is good.
And I hear that some companies are also not doing matching anymore because it's so expensive. It's costing them so much with health insurance and all other things. They are backing off on the matching. So they are not matching anymore. So you just have to know where you are with your job. If they are matching, you just match the exact percentage so that it will be in the markets. That's the mutual funds. It's out there, right? But if they are not matching, you have to find a better avenue to
for
put
your
your
money.
money.
Definitely. And then you can do whatever amount they match and then put the rest in a place like an IUL, where the growth again can be fixed or linked into an index, which may produce you something better than what the mutual funds and stock market that they put for you are. If you know, last year, all those people who were about to retire when COVID hit and the market tanked, those people cannot. I mean, they can, but if they go retirement at that time, they are going to lose. Some of them lost 40% of their retirement savings. They have worked and contributed all these years, but they're all gone because of the unpredictability of the stock market right there. But if you have a product like an IUL, which is set up to only go up so much and only come down so much, you can guarantee that all those people will still be around. We'll still have money to take out and use for their retirement benefits, because their money doesn't go negative, as per our discussion earlier. All right. And any other things you...
Let's go to the next slide.
All right. So that is what we are trying to say here. This is some of the excuses. This is some of the excuses that people are giving. There are tons more excuses. There are a lot more of the excuses, but I trust that it will not be something that will hinder you. So in this short while, we're about to wrap up, but one major excuse that we want to hit before we leave the stream is for those of us who are not extremely rich yet, or people who say this is for the rich, you know. I just wanted to tell you a little bit of a difference between the life insurance portion of investment and the regular mutual funds and 401k. If you have a 401k or mutual fund, you're contributing into any index fund that is doing very good. That remains just that. When you are not there, all that you get is what your money has grown into. Or if you are ready to take the money out, what you get is what has already been contributed plus the growth. And again, it is not so predictable. When you need it, it may be down. If you can leave it for a long time, when you need it and it's down, and you can still wait for another 20 years for it to come back to where it was, then praise God. But you may need it at a time that it is low, and you can't wait another 10 years to take your retirement fund out, right? Also, all they promise you is the money that you can take out. But for a life insurance policy or plan, if you can take cash benefit out, when you need it. And then, God forbid, if you die, the death benefit is also coming. So this is like double benefit. You take money while you are alive. You can pay it back as a loan or as a withdrawal, depending on what you need and depending on the guidelines as to what you want to do with the money. That is something you can do with an IUL. And then plus, when you are gone, they pay a huge sum of money minus whatever you took out. So I'll make a quick example. Say you have a policy for $1 million, right? $1 million, and you start contributing. 3 years into the contribution, God forbid something happens and you pass away. They are going to pay all the $1 million to your beneficiaries. And if you have children, that can pay for their expenses, your mortgage, and everything that they need, right? That is 3 years of contribution. 5 years of contribution, however long you contribute before you pass away, because you have fixed the death benefit amount. Sometimes it even goes up depending on how you set it up. You are going to receive those benefits. But for a regular policy, regular index fund, your money wouldn't have grown in that amount of time for you or your beneficiaries to receive $1 million. If you start contributing now into an index fund, it will take you a long time to reach $1 million. So that when you reach that $1 million, your money can either be taken out or be given to your family. But for a life insurance policy, when you pass away, no matter how long you have contributed, the death benefit is going to be paid. Unless you did something and then the insurance company thinks you killed yourself or something. But if naturally you pass away and you have made that commitment to paying while you are alive, your whole family will receive however much money you had signed up for. Even if it took 5 years for you to die, even if it took 10 years. But somebody will say, hey, I put my money in mutual funds and stock market. Yes, 5 years wouldn't make you have anything unless you're already putting in the 1 million right there, which most of you cannot. I know I cannot put it in right there.
And also another advantage is the tax advantage.
And the tax advantage.
So the 401k and all that, we have something called deferred tax. Mm-hmm. You're not paying tax on it now, but when you reach the retirement age, you go and you see that, I have saved 500,000 cash money in there. Mm-hmm. That's not all for you.
Exactly, because your tax hasn't been taxed.
Yeah, depending on your tax bracket, they are going to deduct
your taxes.
The taxes that you deferred when you were contributing.
Exactly.
But with the life insurance, whatever you take out is tax-free.
Tax-free for whatever you are putting.
Contributed.
Yeah, because when you are contributing, it was after tax money that you contributed. Your paycheck that you have received, that's what you use some for the policy. So when you take it out, the only thing that they will take taxes on is the growth on it. Right. But for a 401k, because it's not taxed, the employer takes it at source, you're going to be hit with a huge or bigger tax. And then plus the advantages that I've already said. 401k, it would depend only on what you have contributed and the growth in it, plus it minus the taxes. But in an IUL or life insurance case, if you pass away, you can get all the amount that you were paying for. And if you don't pass away and you live long enough, you also accrue cash value that you can take out for retirement purposes, for your business purposes. Maybe you want to go in real estate. You can take those monies for your down payment for an apartment complex you want to buy, and all those good stuff.
And even if you don't want to take just the cash flow, what amount you've contributed, you can borrow from yourself at a lower interest
At
rate.
a lower interest rate.
So people term IUL as being your own bank.
Being your own bank.
So you have the money, and it's not fully your money because you have to pay tax on it with the accruement, right? The profits,
the one that is
you've
accrued,
made.
yeah.
Yes, but you can borrow from it. You can borrow from it at a lower interest, and whatever interest you are paying indirectly, you are paying it to yourself. Because it's indirectly your money. And some people also use that as a collateral to borrow from the bank.
My goodness.
You go to the bank and
you see how much you have,
how
in
much
there.
you've contributed in your life insurance. Maybe you are getting to this stage in life that you want to retire, or you want to venture into a business, but the business is such that you need huge amount of money. You can use your life insurance as a collateral to borrow from the bank.
Wow, that is huge. That is huge. So you use that to borrow huge sums of money if your life insurance is that big, because even now when you are borrowing from the bank, sometimes they ask you, I was going to take a loan at some point. I don't remember when. I didn't know. I wasn't in this business. I remember the bank actually asking me, do I have life insurance? I was like, why are you asking me all these questions? But then this is the reason, because they don't want to risk themselves to somebody who can easily pass away and then their money goes unpaid. But if you have life insurance and they know how much, they can give you all the money, pay your credit. They will say that, hey, after all, even if he dies, his life insurance will take care of it. So you have more leverage to getting better deals from the banks. And then also, like Gifty said, you can borrow from your own money if you have contributed long enough, and then that money becomes investment money that you can use to buy properties, real estate, or whatever you want to do. So it is huge. I was asking myself, why did nobody tell me this when I graduated at first? They got to add. To be honest, they got to add some of these things to college, seniors curriculum, because you graduate and you think about buying a brand new car. You pay the brand new car $500, $600 a month every month
for 5 years.
5 years, and that money is gone, and the car has depreciated. If that 5 years, if you were able to do it in 10 years in a policy, you can set up a policy that you pay for a maximum of 10 years, and then your money, you just stop paying because of the way you set it up, and that your money there will continue to grow when you are not oh my goodness, man. Those who didn't tell me this, but I'm happy because we are going to do this. I didn't want to start this sound effect, but yeah, that is exactly what we want to say here. So again, it is all dependent on how you set up your policy. So before we wrap up, we just want to go through this because some people have several excuses. I want to show you how you can definitely go through some of the excuses and start doing this. So the first thing that we think you should do is to have protection, some form of life protection, protection for your family. That is the steps to grow wealth, right? As we say there, you got to first have some form of protection. And we encourage people to use permanent life insurance, in particular, the whole the universal index universal life insurance. That's what I like. But you can use any form of permanent life insurance to do this. So that's the first level. And then after that, if you're able to do that, no matter how small, you just have to start from somewhere. Because with that, you know that if God forbid you die in a car crash, your parents or your children or your spouse has been taken care of. So that's the first level. No matter how rich or poor you are, you got to have some form of protection. Moreover, you don't die, but you get some kind of a severe or serious disease. Because you set it up to have a benefit while you are alive, you can benefit, whether it's an income that you can take from that life insurance policy, or it is long-term care provision where people will come to your house and take care of you so your wife can be free, or some other kind of provision that you put in there in your particular policy. So everybody needs a protection. Either you protect your children, your family, or protect your own self in case you get hurt and you can't work anymore. So that's the basic. The second one is debt elimination. After you've done that, then you think about how you pay off your credit cards and stuff like that. We're going to have a show and talk more about debt elimination. And then the next one will be hitting on emergency fund, you know. And then the next one, after you've done all these three, then if you have cash, because you have been able to eliminate your debt, because you have already set up your emergency fund, all the other cash things that are going to come in your hand, it is free now to be invested in real estate. This is where people who love real estate, this is where you come. You definitely got to get protection before you start real estate, because if you buy properties and God forbid something happens and you can't work, you can't pay the mortgages, you are going to lose all of them big time. But if you are protected, say you put an income generation portion into your life insurance, while you are hurt, your properties you can pay, because your life insurance will pay back your income if you set it up that way. You know, adding all those features may make it a little expensive. That's why people say it is expensive. Yeah, because you're protecting yourself against the things, the worst things that could happen. But if you say that, hey, I just need protection for my family, that's fine. You're going to get the bare minimum. And if you live long enough, because it's still accruing cash value, interest growth and stuff like that, you will still be able to pull cash from it when it is grown over a long period. I don't know if you want to add anything, but I think we are about.
Yeah, so we can look at this. I think people put it this way, like the foundation. So you have to build the foundation, put it like on a strong, solid foundation.
A strong financial foundation.
Financial foundation.
And this is where you start.
Yes. So if you are going to start from the top, I think I remember my coach was saying that most of us will start from the top. We just want to get out from school and we just want to invest. But like you said, if something happened, you are going to file for bankruptcy because the foundation wasn't solid enough. So you have to start from the bottom. The credit cards, I know, like some of us were not informed or we were not knowledgeable. If you look at the credit card, I think that when I was reading the book about the building wealth, it talked about what the rich people are doing or what the rich know that the poor do not know. So the poor tend to spend their money or use their money to pay interest rate. Interest rate by using the credit card. You're swiping. Then I keep hearing from my peers saying that, oh, here you have to be in debt before they acknowledge you.
Oh my goodness.
And because of that misinformation, people are misusing their credit card. And the interest rate, the 24%,
18%, 11%, even if it's low, it is still somebody's money.
So you want to get rid of debt. You want to get rid of debt completely. Then you can set up an emergency fund. Then you can invest your money that will bring returns. So you are going to let your money work harder because we've done it all. We've worked hard. Some people have 3 jobs and 2 jobs, but they don't have anything to show. You know, because we are not doing all the right things. Just working hard is not enough. You have to work smart.
You got to work smart.
You have to work smart. And let your money work harder for you.
Let your money work for you.
Yeah,
put that money to work is what I heard other people say. Put that money to work for you. And we're going to spend more time on this chat right here in the future videos. We want you to subscribe if you've not already subscribed. And make sure that you share the stream if you haven't already, and show it to your husband, show it to your wife. Get something. Some people think that if I get life insurance, my wife will kill me. My goodness. I don't know what kind of wife you married, but hopefully not. Hopefully you married the right one. But even if they kill you, at least your kids will benefit, right? But I know no wife. No wife on the line. Come on, say no way. We don't. My goodness. And the same also applies to the women. If I do it, it doesn't work like that. It doesn't work like that. Those days that we used to think about, those are long gone. If that woman thinks that you being away is going to be something beneficial to them, then you must leave them now, because even without life insurance, they can kill you slowly. Leave them right now. Yeah, you don't need to get life insurance to wait. That is not a perfect marriage. That's not a good marriage, because there's no perfect marriage, right? Yeah, but that is what we want to say on that front. Let me see if I can go to my next slide here. So what we are saying is, some people also, they will watch this video today. We are going to call some of our folks that we know, and tell them about this. I mean, we have been licensed in this. We can provide you with services, and those places that we don't, we can send you off to a professional. There are some people in our company that are higher up and that know more. We can always refer you to them, but don't procrastinate, because tomorrow is not yours. I know that believers, we say that God don't think of tomorrow, but God doesn't want you to think about tomorrow. He wants you to make tomorrow ready, so that if you hit tomorrow, your children can also be enjoying. You don't wait for tomorrow to come before you do anything. So take an action. When we call you or when somebody calls you, take an action. And a 1,000-mile journey begins but with a step. You always have to start, even if it's just a protection for now. Something small, just make sure that at least you are covered. And we have used all this illustration. They are proven things in the market, but the disclaimer is that it is also dependent on how you do it, how much you can put in, and also how long you can leave your money in there. And also the markets are not guaranteed. Stock markets are not guaranteed. If you choose a policy that is variable, which is they are going to invest in the stock market, and you don't grow your money, don't say that those folks say that it will grow because the market tanked. You got to be smart when you're doing this. And that is where our personal experience and understanding will come in when we speak to you. But definitely start something. Don't be the same. If you have any questions and you want to send us a text message, just text us. And again, if we cannot help you, we will send you to the right places. We don't need anything but for you to be financially secure, physically healthy, and doing well in your soul, which many people already have done. So, Annie, I think unless you have anything, we can wrap up here. So
we are just giving a general information.
Yes.
There is no specificity to what we are talking about. So if you want specificity or something that
specific
will
in your
work
particular
for you,
situation, yeah, because
yes.
your age also counts.
Right,
If you start early, you may be paying or getting something that is very small compared to somebody who is already very old and needs to contribute more. But even that, if you know what you are getting, you can sacrifice and do it. And then the other thing is do it over the long haul. You don't start and say, this money that I'm contributing, what do I do? I don't gain anything. And then remember the definition of wealth that she showed. It's money plus time. Without time, you can't do it. That would be like a pyramid. You just put your money and it blows somewhere. No, you got to wait for it over some time. And so if you can put those things together and follow through with what your agent or your financial advisor will teach you, ask questions. Don't be like you don't know anything. Yeah, ask questions. What if I can get this? Can I get this? If you add this, what will it be? Everything that you need to know, ask. If they are not answering your questions, they must be able to at least ask other people who are above them who will be able to help you. But definitely take advantage. If you have questions, just test us. Again, I think the number it's on the screen is 5860. This is for the United States only. If you are not in the United States, there may be other products in other countries, and you can look up and see the reputable organizations that can help you. But for the US, maybe Canada, you can always talk to us and we can direct you to the right places if we cannot help you ourselves. And so that is where we want to end the stream. You have anything else?
No, we're good.
All right. So again, I think we have a fired up show. I'm so fired up because, like I said, if somebody had told me this right after school, in my 20s, I would have been making more money by now. But it's all good.
It's all good.
At least I got it at some point. And so if you've gotten that message today, don't sit around. Make sure you take it to the next level, and so that teach your kids. Some of these things you do it even for your kids. Teach them how to do all these things. All right. So we end the stream here by saying, Beloved, we wish above all things that you prosper and be in health, even as your soul prospers. Thank you for staying with us today, and we hope to catch you again on the live sometime next Sunday, if not before. All right. Thank you.
Thank you.